collapse of the housing market in 2008 and the massive loss of jobs that followed, millions of Americans have found themselves with a bankruptcy, short sale, or even a foreclosure on their record. I'm Jonathan Getty of Catalyst Lending, and this is a quick guide to reestablishing your credit after a bankruptcy, short sale, or other major derogatory credit issue. These same tips can be used for establishing credit for the very first time.
What is the most common mistake that people make with their credit after going through a bankruptcy, short sale, or foreclosure? Doing nothing. By doing nothing, you're leaving all those negative accounts on your record as the last thing that is reported to the credit agencies. If you are lucky, you still have a car loan, credit cards, or other accounts in good standing that are still reporting, in which case, make sure you keep paying those accounts on time. If you do not have accounts still reporting, or if all but one or two accounts were wiped out, actively reestablishing your credit and good payment history is vital to getting your credit score back up to an acceptable level. First, you should find out where you stand. Knowing where you stand, what accounts are currently reporting, and where you are starting from is important to creating the best plan to improve your credit score. You may want to consult an expert for this type of planning. Once you know where you're starting, there are two ways to establish or reestablish your credit. The first method is to become an authorized user. Authorized user accounts can be reported to your credit and may have an impact on your score. You may need to instruct the creditor to report the account, so check to make sure that it will report when being added to the account. You should only become an authorized user on an active, established account with good payment history and low balance to limit ratio. The account should also have been established a long time ago. The farther back, the better. As an authorized user, you will have access to the account in full, but you will not receive the bill. It's important to note that if the account becomes delinquent, that too will be reported on your credit history. Though this method has been used by credit repair companies for years, the Fair Isaac Company, or FICO, that helps the credit reporting agencies compile and determine credit scores has been actively trying to eliminate the effectiveness of adding authorized user accounts for years. Considered piggybacking on someone else's credit, this method is a shortcut that may have little to no impact on your score and is not the recommended method. The second method is to open new secured credit accounts. This is the preferred method for building or rebuilding your credit. Your immediate reaction may be, but I can't get a credit card. I just filed bankruptcy. You may be right. A traditional credit card may not be an option for you, but that does not mean you cannot start a new credit account. Most banks will give you the option to open a secured credit card. Instead of the bank giving you a credit card with a limit of $500 and hoping that you pay them back, you give the bank $500 and then they give you a card with a $500 limit. It's simple. The bank has your money already, so they don't have any risk. For mortgages, it is important to have multiple accounts reporting to the credit agencies. While every program is different and it is not always required, the typical mortgage lender wants to see 3 lines of credit active for at least 12 months. If you make sure you have multiple accounts, pay them on time, and keep your balance to less than 25% of the limit, your credit score will increase much faster and you get in a better position to qualify for a loan. Go to our website, catalystlending.com/credit, to learn more about the other aspects of credit, pull a credit report, set up a consultation, or apply for a loan.